Thank you, sir.
Okay, thank you for your questions. They they highlighted our view about PPT and the other projects and their financial side. Thank you, and we will continue with Murat Konuklar about the bridging the gap, behavioral finance, and the role of AI in overcoming human biases in portfolio investment and asset management. Murat, you are here. Mr. Konuklar will start.
Yes, hi to all audience.
Hello.
Hi. Hello.
You. Because not everyone is opening the microphone, so they cannot
Yeah.
answer quickly. We hear you, no
Yeah.
problem. Mr. Konuklar.
Okay, can you hear me? Can you hear me?
Yes, we do. If you want, you
Oh.
can start.
Okay then. So you're all welcome. Today I'm going to present a brief conceptual and implementational framework of artificial intelligence and frontiers for finance, a special focus on asset management and portfolio investment. As the artificial intelligence is a not perfect but nearly perfect simulation of human brain process, especially a neuromorphic processor system based on the signal and the threshold evaluation. So the outputs and this conceptual framework has been used in many industrial areas such as autonomous vehicles, smart cars, in terms of security recognition, healthcare, robotic processes, finance, medical advances, in terms and transportation especially. Artificial intelligence has a wide usage. Since it has been processed by 1950s and nowadays it's shaped into transformative AI. At the first, it was just an advanced statistical learning and processing method, but right now, machine learning and deep learning has advanced heavily. In terms of terminology, artificial intelligence is the wider family, and machine learning is a subset, and the deep learning is the most prominent subcategory of the machine learning. The main problem is here the data and the quality of the data, which we call is the big data, data sets known as big data, which fuels algorithms as they analyze, learn, and react and enable automated decision making. So what brings AI to our businesses or to our operations? First, the concept of automation. Second, smart decision making. Third, more practical and fast research and data analysis. The fourth one is the resolution of complex problems. Yes, the artificial intelligence is so professional in making inferences about complex problems, and the error reduction is so intense. So in a very short period of time, AI can enable us to reduce errors by a significant amount. Yes, we have some kind of overfitting problems and in terms of training and implementation processes, but as the approaches evolves, deep learning and generative AI brings more solutions to this problem. In terms of finance, the AI has to be used to achieve target returns about risk and capital allocation. As so, the human and AI partnership is important here. And what's the main point here is the understanding of risk appetite and the crucial role of in investment management of this risk appetite. As the human brain is biased for the easy ones sometimes and waits from the hard ones, the AI writes all the options in very particular manner. In terms of finance, we can conceptualize this as efficient market hypothesis in terms of processing information to gain profit, and this brings us the price and value conception. The information is important here, and the process of evaluation of information is important. So AI, especially deep learning methods, brings us very advanced algorithms to reduce the noise and to reduce the wrong signals, to understand the market structure and the profit gaining processes. The main problem in today's global financial markets is the huge volume and high volatility, especially originating from the noise trading model. But the AI, by using this signal processing methods, can easily differentiate this kind of wrong and false signals. And in terms of investment management, investor sentiment is important. So AI, especially by using machine learning and deep learning methods, can differentiate the investment sentiment in terms of short-term and long-term. So what's the AI based in trading? It's algorithmic trading, predictive trading, and high-frequency trading. Especially in United States and Canada, United Kingdom, and European Union, Japan, Singapore, they use high-frequency trading platforms and algorithms. Especially in Turkey right now, so few bank and investment houses uses such kind of high-frequency trading platforms, and they can easily manipulate the market and the security prices. So the machine learning process requires first an architecture, and then software, and the objectives. Objective is to maximize the profit with the minimum capital within a minimum short of time, and to predict the asset prices or contract prices using momentum. Software required especially C, C++, Java, Python, RStudio, and MATLAB. And this quantitative trading has base for algorithmic trading. In Python, it's much better. And in terms of architecture, they require the server, market data receiver, storing market data, and storing generating by the user. The problem is the access to the data and the time to evaluate this data. It requires not more than 1 or 2 seconds. So this is not so perfect in terms of AI implementation in finance. It can potentially freeze markets by using these algorithmic trading and AI applications in investment management, and create instability when trading strategies interact in unforeseen ways. Yes, we have some kind of historical events within the last 20 years, especially flash crash, we call it, or during 2016 Brexit referendum. The markets and stock exchange indices fluctuated heavily, and they have to be orchestrated. And this is the main structure of the algorithmic trading view, which separates the human emotions from his biasness. First, you load data, process data by using advanced statistical methods, and then you choose your method, supervised learning method, so, for example, as classification or regression, and you feed your model. And then you integrate your trained model into applications and feed new data, and the model gives you a prediction. The main learning methods is supervised learning, unsupervised learning, and reinforcement learning. And the methods, as can be seen in the table, but there is no single best method that fits all securities or all market structures. So it requires an heuristic and rational diagnosis first. The main steps of this algorithmic trading and artificial intelligence applications requires a pre-trade step, a research step, sales, trading, and post-trade and risk and finance evaluation. And the benefits of automated trading includes the ability of trades to be executed at the best possible prices, increased accuracy, and reduced likelihood of mistakes. And the human errors caused by psychological and emotional conditions are likely to be reduced. And the main strategies is signal processing, market settlement, newsreader, and pattern recognition strategies is applied by artificial intelligence framework. And so when we have these advanced algorithms, so how the investors behave, they sometimes have some kind of algorithm inversions, so they evade from some kind of advanced algorithmic framework. So thanks for your participation. If you have any questions, I can help you.
What? For your presentation, dear Konuklar. It was a nice topic. And we also believe the artificial intelligence, and we explained, deep learning will bring many opportunities to financial behavioral area. And the IE and artificial intelligence and deep learning will make more connections than we can, so it will be very effective and useful future. I only wanted to ask how you also explained there are some bias that the financial decision makers can avoid. So how is it used often in that area now, and can you give an example about the empirical impact of that in Turkey?
Yeah, yes. When we focus on Turkish markets, two investment houses, one is local and the other one is foreign investment house. They use two different algorithms. One is called Papillon, the other one is called RP-Chicago, and they manipulate the market, and they make the stock exchange indices to go down faster than the market experts anticipate. And the regulatory framework, especially capital markets organization, has to thwart them. Otherwise, they manipulate the market structure and the market prices heavily within the last 6 months. And in a global term, BlackRock investment house has a very advanced artificial intelligence implementation called Aladdin.
For your answer, does anyone has any questions? I think there is no
Okay, then.
question.